Right, great. We'll get started. Okay, welcome everyone who is joining us for this session. Okay, if you are first time here, welcome. Okay, we do this every week as much as we can. Okay, on Monday we do it in English, and on Thursday we do it in Chinese. And of course, for those of you who have been joining us for some time, you should be familiar what we do over here on a week-to-week basis, right? So as usual, okay, we'll kickstart with sharing with you what are some of the potential opportunities I'm personally looking out for this week. Okay, and after that, we'll open up the remaining time for Q&A. Okay, so this is then again an opportunity for you if you have any particular questions related to trading or investing. You'll be able to use this chance to actually get some different opinion, insights, and of course, if you have any particular instrument, forex currency, stock market that you'd like me to share my analysis, okay, that's also an opportunity for you to hop on board and ask some questions. Okay, and of course, all I ask is just to be engaged, alright? So do feel free to ask questions, and of course, if you like this kind of sharing session, do show your support by just either subscribe to the channel, like this video so it helps the YouTube algorithm to reach out to more people, or if you can actually share this with your fellow traders and investing friends, that would be great too. Okay, so let's first start out with I want to quickly talk about what happened last week on non-farm, okay, NFP, and I think a lot of traders tend to focus and give a lot of emphasis on this particular event, right? And I thought, okay, let's just talk a little bit about it. Okay, so over here, again, a lot of times people only remember that non-farm is actually one of the very important data. But actually on that same day, you do have the other two economic data as well, right? That's released. One is the average hourly earnings. Okay, this is actually pretty important because this can give the indication as to whether potentially will there be an inflation coming in. Right? Because the natural tendency is that the more people earns, the more they tend to spend, okay? And spending eventually will lead to higher demand and therefore drive prices up, and that's what we call inflation. Okay. The other data that's released same time with NFP is our unemployment rate, which is also fairly important, right? Because it tracks how many people are having a job, how many people are unemployed. Okay. So on top of just NFP last Friday, you can see it came out about 266, but the expected one was 990, so it was a great miss, right? It's a huge disparity. Okay, and this is usually what we call a surprise, okay? Because people were expecting about 990,000, it came out only about 260,000, so that's like a huge misalignment. That's where you do see the dollar starts to sell off, right? But what I feel is more important is I think that can be a very short-term thing where you see the dollar prices go up and down. But I think what's more important to track is really, you can see right now average hourly earnings beat the expectation also by a lot, right? So there was an estimate of 0%, but it came out 0.7%. Okay, but at the same time, it's important for you to also take note that unemployment rate actually rises. Okay, which means there are more people unemployed right now, but the average that those are working are actually making more, right? So you then, from this data alone, of course, is not sufficient, but you start to see, okay, is there a disparity of, or I would say, is the income gap widening, right? So there are people who is not working, but at the same time, people who are working are getting paid higher, okay? So definitely over here, I think the statistics, or I would say the data here actually support that inflation is bound to come, right? I would say I'm almost like 90% certain we'll see inflation in the next 6 to 12 months, okay? And of course, that's what the Fed wants, right? That's what they want to see, inflation, and they are allowing short-term inflation to overrun a little bit to pull out the average long-term towards 2%. And this is something that you need to be aware already. Okay? If not, then you need to start taking precautionary steps to protect yourself against inflation. Now, inflation is definitely here. It's definitely going to come. The question is, are we going to see hyperinflation? Okay, because of what the Fed is right now allowing it to happen. if it's not controlled properly, it can lead to hyperinflation. Okay, and that is very, very scary, right? Essentially, what it means is that there's a huge devaluation of the US dollar, okay, and there will be a flight of funds out of the US dollar towards some other different asset. Okay, and that's scary because internationally right now a lot of trades are based on USD. So if the dollar starts to drop, starts to devalue, naturally prices of goods and services will shoot up even more. Okay, so do take note of that. Of course, there's just various ways that you can protect yourself against inflation. One way is of course to hedge it with different asset, right? And one of the most common asset here that you probably hear me say quite frequently recently is commodities, right? And you do see a lot of all these commodities are already starting to rise. Okay, so you can hedge it against that. Gold, silver for sure. Okay, and of course, if you're understanding how the macroeconomics play out, you can also look into stock market. Okay, and of course, if you're actively involved in FX, that's even better, right? There are so many ways for you to hedge against the US dollar. Okay, so that's the broad picture I wanted to just touch very quickly on as well. And with that, let's jump into what are some of the potential pairs to keep an eye on for this week. Now, last week, the market was really, really slow. Okay, for me as a swing trader, that's really not much of an opportunity last week. Right, so that's the nature of the market, right? You do see some impulses, which is very, very nice movement, something like that. And then after that, the market starts to go into a consolidation phase. Okay, so we call it correction. And for a swing trader like myself, I tend to avoid being in the consolidation phase. That means when the market is doing its correction, I tend to stay out of it because when it's chopping up and down, it's very difficult for me to actually trade it, right? So I tend to stay out of it. Right? Now, usually, correction takes a longer time to develop compared to an impulse. Right? So to give you some time scale expectation is that if let's say this impulse took a week, then naturally the correction here is about 2 to 3 weeks. Alright, so that's where it gives us some kind of time expectation, and as a trader, I do not need to rush into it. There's no FOMO involved. I am aware, okay, of what I need to do in order for me to be waiting for the next impulse push, right? So that's where you need to be patient. So this week itself, I'm seeing that some of this correction are likely gonna be completed by this week. Right? But some of it are still within that phase, and therefore this week itself might not be a lot of opportunities, right? So if you have been following me since I think a couple of months, you know that there are certain weeks that we have like tons of opportunity to look out for. There are weeks where you only have like 1 or 2. That's what happened last week. Okay, this week here not too bad. Over here I have like 4 FX setups. 4 FX pairs to focus on, and of course we'll talk a little bit about Bitcoin, Dogecoin. Okay, I think that's very popular right now as well. Then we'll look at commodities. Okay, so first up over here we have pound franc. Right, so on the 4-hour chart, I think this is super obvious. You have this impulse drop, and then right now it's developing what we call a crawl. Okay, or you can call it a diagonal as well. Okay. And over here, you can see very nicely when I draw in this 2 line, I think that's very obvious right now. Okay, so I'm expecting one more push back down towards somewhere around 1.2575 before I start to look for a buy trade to the upside, right? That's the ideal situation that I want to see. But I do understand that market does not need to always be perfect. Okay, so what I'm seeing right now is that there might be a possibility that price will not come back to 1.2575. It came very, very close. I think that's about 5 pips, right? Which literally is nothing, okay? 5 pips is small. You can consider it. It has even come back down, right? So looking at things right now over here, okay, if I were to clean up a little bit on this, okay, this can be a completed diagonal, right? And of course, it doesn't mean that immediately right now we're going to jump into the buy and then, take the trade. Nope, right? Why? Because you can see this is a small mini impulse push, right? It's a very strong momentum to the upside. So what I want to then wait for right now is for this to maybe form a small correction, okay, or what we call a flag pattern, right? So these are setups that if you have been following, you should be very familiar what we are looking out for. Okay, so this one here, I think there's a high probability if, let's say, maybe by tomorrow or Wednesday, right, you give it a bit of time, maybe 1 or 2 days, if let's say this forms a very slow corrective pattern like that, okay, we call it a flag, you have an impulse push, you have a correction, then the probability for this to go back up to 1.28 trendy, very high, okay, and if it breaks through 1.28 trendy, it can even go higher towards the previous high here at 1.3070. Okay. So to me, the upside is very, very attractive, okay, because if let's say roughly this is what is going to develop, I can show you that potential risk to reward ratio. Okay, let's say we have about like 55 pips of stops, roughly there, your risk to reward ratio for your first target, okay, is 1:2. It's definitely not the very attractive side, but if you target here, it's 1:6. Okay, so what you can do, of course, you can have multiple take profits. Okay, these are just suggested level for you to keep an eye on. Okay, but of course, don't jump in today. You need to definitely see a correction, right, to increase that probability, because this can, of course, definitely still can come back down first. Okay, yeah. So pound franc, I think, is one pair that you want to keep an eye on. Depending on how it's gonna develop in a day or two, okay, you might have a very solid trade to the upside. Okay. What I like about this, of course, if you bring in, let's say, your RSI, okay, you'd start to see divergence setting up over here as well, which means from this low here, price actually made a small little low, but RSI indicator actually makes a higher low, right? So that's indicating that the momentum is dying out and the reversal is likely to come. Okay, so definitely you want to keep an eye on pound franc. The other one over here, you can see we do have multiple franc pairs, Kiwi franc, Cat franc as well. Let me talk about those francs pairs and then we jump into Euro Yen. Okay. Kiwi franc is pretty much similar in terms of direction. We are looking for the upside. But of course, the patterns that's developing is slightly different over here on franc. Okay. Now, first off, you can see from this low here. Okay, this low here, we have a very strong push to the upside. And then from there, the market starts to form a small little sideways move, right? Within this, of course, you do see this impulsive up and down. But you zoom out and look at this scale here, relative to this push, this is the correction, right? So again, look at things relative. So from this, we expect the market to, the probability is still higher to the upside, right? Potentially back to 6.765. Okay, so I'm monitoring this for the week as well, but I think this here, you need to wait for a little bit more confirmation. Okay, so let's say you zoom in a little bit right now. Okay, you do see, maybe if I go down to the 1 hour chart for you to look at it, right? You do see right now from this high here, we get a rejection down that's pretty strong in momentum. Okay, so we call this the V-shaped formation, and then you have this sideways move, right? So you have actually, if you put them together, you have this impulse, you have this correction, which suggests that this can still come back down. Okay, so there are a few things you need to look out for. This is not as clear cut as the pound franc setup. Okay, but ideally is something like that, right? 1, 2, 3. Okay, somewhere around this. If let's say it comes down very slow and it forms kind of like a flag structure like that, you then also have this impulse correction for this push to go up, right? So there are a few things you definitely need to keep an eye on, how price is going to develop maybe tomorrow or Wednesday, okay, before I would say to have that conviction to trade it to the upside. Okay, so let's say if, let me draw it cleaner, right? Let's say this forms something like that. Okay, so you can see, right, this is the big impulse correction, and then within it you have the small impulse correction, right? So if you have two patterns like that, one big, one small, lining up together, the probability to the upside is also pretty high. Okay, so that's where I say you need to give it maybe 1 or 2 days and see how it develops. Okay, if you're looking to target the upside, over here, of course, the final target is about 6.765, right? 0.6765. Okay, so let's see how this goes. If you're interested in it, put it into your watch list. Keep an eye on Kiwi franc. right? The other one here is on Canadian franc. Okay, this one is slightly in terms of opposite direction. Okay, because the two other francs, pound franc and Kiwi franc, we're looking for an upside. But for cat franc over here, I'm more interested in the downside. Okay, now over here, let me bring you your attention to this potential development of price. Okay, can you see how price has been moving up over here? Right, it's going up, but it's very slow. Okay, these are the move that we call it a crawl. Okay, just imagine like you're climbing up a mountain, you're hiking a mountain. At the start, okay, you have full of energy, you climb up very fast, and then after that you start to get tired, you be exhausted, okay, and then eventually there's a high chance you fall back down, right? Okay, that's the psychology behind it. And if you take a look at the combination, most of the time whenever you see a structure like that, a pattern like that, you bring in your momentum indicators, okay, you would see divergence. Okay, now I wouldn't say 100% of the time you definitely see it, but good 90 to 95% of the time, whenever you see something like that, you see a divergence. Okay, so you can include in a momentum indicator to kind of like give you that confirmation. But if today you're a little bit more experienced into analyzing and identifying the patterns on the chart, you don't really need them. Okay, so this again suggests and indicate that there's a higher chance this will come back down, right? And that's the reason why I'm actually monitoring on this pair here for the week as well. Okay, now the one thing is, okay, maybe I'll share with you the target, right? If you're looking for it to come back down, okay, this is the price level that you might potentially want to keep an eye on, 7310. Okay, but just now I wanted to say is one thing though is that this structure did not touch the previous high. Okay, if let's say this entire pattern continues and it comes up and completes somewhere around here, which is where the previous high is, then that is perfect. Okay, so if let's say these things happen, right? Let's say this exact thing happened and we have break this high with a very, very slow move to the upside. These are trade that I call 10 out of 10. Okay, now what does it mean? It means that every time I see something like that, I will be very, very interested to take the trade. Even if one or two times, I will take a loss on such setup, but every time I see something like that, I'll take it over and over again, right? That's what I call 10 out of 10. Okay, but of course right now market is not there, right? Okay, right now is somewhere here. Okay, never really break this first high. Okay, but it's still valid, right? You can still see this very, very slow move. The probability is due to the downside, but it's no longer a 10 out of 10 kind of trade. Maybe this is more like a 6 or 7, okay, out of 10. Right, so it's still a pretty solid, pretty decent trade, just that it's not something that I will take it 100% of the time, right? So it becomes a little bit more discretionary. It's more of whether I'm willing to take that risk, am I a little bit more aggressive, or would I choose to be a little bit more conservative, okay? So that's that discretionary element when it's not 10 out of 10. Okay, but I still want to share this opportunity with you because we need to understand that the market does not need to perfect all the time. It does not need to come back up. It can actually just do something like that, and then from here it starts to drop, right? So definitely have this in your watch list. But what you want to see perhaps is to go down on the 1 hour chart. You want to see something like that, right? A flag, right? So what you have is from this high, you have this impulse, you have this flag, and then that's where it starts to drop. Okay, and of course over here you can also see that if I were to insert the line in, right, price has kind of break that as well, though I don't give too much kind of like emphasis on all these trend lines breaking, but you can still see how this has break. And if let's say it consolidates below that trend line, then of course the probability to the downside is definitely still there. Okay, so something that you can keep an eye on for at franc. Okay, so the target here, very conservative, is 7310. Okay, last one here on FX side for you to keep an eye on is on Euro Yen. Okay, so this one, if I bring you to the daily, we have been emphasizing on the potential sell trade. Okay, with two targets, of course, over here, 125 and 119.30. So you can see the downside is definitely huge, right? And again, you do see this setup. Okay, very slow move relative to this first push. And of course, this is ending up as a very slow move as well, right? Momentum is definitely dying. Okay, as it continues to go higher, the momentum is slowing down. Therefore, there's a higher chance that it's going to reverse. Okay, on the 4-hour chart here, right now, as I'm speaking, as we are here, you do see a potential double top. Okay, not confirmed yet because this can easily just keep breaking highs, right? So the idea here is I'm definitely keeping a very close watch on this, because if, let's say, okay, I don't know if today is going to happen or not, but let's say this develops something like that. Okay, so a mini diagonal. For this to develop, maybe you need to give it 2 days, right? Tuesday and Wednesday. So let's say Wednesday, you look at the chart on Euro Yen 4-hour time frame, you see something like that. Okay, this is a 10 out of 10 setup. Definitely, I'll take that trade. Okay, so very simple how to execute this kind of trade. Whenever I see a diagonal double top, daily is also suggesting that 10 out of 10. Just look for that simple breakout, maybe about 50 pips of stops, your target all the way back down here. Your risk to reward is already 7.8, right? And that level is only at 128, right? Let me show you that, okay? That level is only at 128, right? If you're looking for even more, this can be another trade of the year for 2021, okay? So definitely want to keep an eye on that. Okay, so this is one potential. If let's say you see a pattern like that by Wednesday, this is what I call 10 out of 10. Okay, so it's definitely a trade that I'll take. Okay, but of course, for those of you who are not aware, right, 10 out of 10 does not mean you throw all in or you risk very big. Okay, you still need to have stringent risk management. It just means 10 out of 10 is a trade that I'll take no matter what the outcome is. I'll take it every time I see something like that. Okay, so that's one setup. The other potential play here is that from here, this can come down impulsively, and after that, it forms a flag, right? So if this setup here happen, I'll also take that trade. It's also more of like a 9 or 10 out of 10 trade, right? It's still a no-brainer. Definitely will take it. Why? You have this double top formation. You have this mini flag correction pattern. You have the daily suggesting downside. You have like huge opportunity that you can capitalize on, right? So it's again a 10 out of 10 trade. Okay, so same thing, if you see something like that, very simple, just trade the breakout. Your stop loss is about, again, 40 pips or so. Same thing, your target is down there. Your risk to reward ratio is definitely going to be worthwhile. Okay, yeah. So Euro Yen is definitely one pair you want to keep very close watch. Of course, not selling it immediately today, because you need to then see what is going to develop. Because today, it can easily just shoot up. Okay, this can just easily continue shooting up. If that, then your whole analysis needs to be updated. Okay, and always I say, don't get too fixated with your analysis. Be flexible enough to always update it according to what the market has developed. Okay, so we need to see, right? Definitely need to give it time. Okay, so that's on Euro Yen. Good. Let's take a look at Bitcoin over here. Okay, so I think recently a lot of hypes, a lot of news, a lot of conversations coming around the crypto scene, right? You have Ethereum breaking highs. Bitcoin starts to sit back, does not have a lot of limelight recently, and then we have like Dogecoin, right? Okay, so I'll share with you a little bit in terms of like Bitcoin, Ethereum, and we'll talk a little bit about Dogecoin as well. But Bitcoin over here, based on the technical patterns, okay, I think you might want to be a little bit cautious, okay, because of how this is developing as of now, right? So I'm not gonna be surprised if, let's say, okay, let me bring this up, it comes back down and retest somewhere around this area, right? So if I put that, that's about $52,500. Okay, if I draw in a little bit of an analysis, probably something like that. Okay, so you can see the pattern clearer. So short term here, this might come down a little bit before maybe another push up. Okay, so again, I can be absolutely wrong, but this is what the chart is suggesting for now. Okay, So perhaps if you're looking to trade it or even invest in it for the longer term, then you might want to consider be a little bit patient and wait out around the 52500 level, okay, for that potential buy-in. Yeah, so this is on Bitcoin. Okay, let's take a look at ETH. Okay, Ethereum is of course right now all-time high, right? The news is breaking above 40,000. But I want you to see is this is an impulse jump, right? So I would suggest to be very, very cautious, because something similar like that in terms of a correction can happen, okay? And you don't want to be buying at this high and then this drop here, right? So that drop, while it looks small, this can be a drop of like 20%, okay? So it's quite a significant move, right? 20%. That's the nature of crypto. It's very, very volatile. Okay, so this is a very quick analysis on Ethereum. Just be cautious. Don't buy in now. Just wait up a little bit. Wait for the correction to happen. Okay. In terms of like Dogecoin, let's use Binance over here. Okay. Now there's a lot of hype around this, okay, how it's going to like $1 and things like that. But I would say be cautious, okay. I'm not gonna be surprised again if, let's say, this breaks back down to, I would say, very conservatively somewhere here. If not, then it can be even lower. Okay, yeah. And that's quite scary, right? If you take a look at this is about 50%, right? A 50% dip. With that recent high, this dip is already about 40%. Okay, so it's definitely very volatile. I would suggest that if you're not familiar with crypto, you're fairly new to trading, just don't touch crypto first, okay? Because psychologically, you might not be able to handle that kind of volatility, and you get very emotional. Okay, so it's not about like which strategy works for crypto, right? It's more of you need to first understand the market of crypto is going to be very volatile. If you're new to trading, you're not able to handle that kind of emotions and psychology trading this asset. Doesn't matter what strategy, right? You're probably just going to make mistakes, and your outcome is it's not going to be something that you enjoy, okay? So for me, I would say Dogecoin, I would strongly recommend you to just avoid. Okay, but if you really want to just play around with it, of course, right now I think Tesla is starting with the news, right? Tesla is starting to also accept it. Yeah, Elon Musk is just like he likes to be in this kind of limelight, right? But I would say, if you really want to be involved in crypto, then just focus on Bitcoin and Ethereum. Okay, that's like the two largest crypto compared to like Dogecoin, right? So take note of that. Okay, and of course, if I give you a little bit more analysis here, you do see this topping formation, right? Again, you see a divergence. Okay, so usually divergence indicate there's a higher chance of a reversal. Okay, so just be very cautious on that right now. Okay, yeah, so that's on Dogecoin, some of the crypto pairs. In terms of commodities like gold and silver, nothing has changed. I would say the overall macro play on these commodities are still there. Okay, so if you have been kind of like monitoring and listening to some of the analysis that we share, we have been talking about how you want to be bullish on the commodities, okay, especially with inflation kicking in. Okay, so gold and silver is lagging a little bit behind, because if you take a look like some other commodities like copper here has broke its 2011 high. Okay, so it has just recently broke its like decade high, right? If you take a look like aluminium, palladium, a lot of all these commodities are already breaking new highs, but gold and silver is still lagging a little bit. Okay, so there's a good news to it. I think it's more of like if you miss out on those other commodity play, then you still have a chance on like gold and silver. Okay, so this is my expectation. In the next 6 months to 1 year, 6 to 12 months time, okay, inflation is going to kick in, and most people, or I would say the headlines, news, right, the media would start to pick it up. Okay, and when that picks up, that's where the mass market, the mass people, the traders, the retail traders, right, will start to then also realize, because of the news, because of the media, and then they will start to come in. Okay, and as a trader or investor, right, while we are still consider ourselves retail traders, what you want to do is you want to position yourself ahead of the mass market. Okay, because when the masses comes in, they will push prices for you. Okay, so you want to be slightly ahead before that. Okay, and that's where, okay, most of the time the charts are able to share with you a little bit. Okay, be ready. At the same time, the macro understanding, the fundamental perspective will give you this insight. Okay, and that's where I'm looking right now, is that since the early start of the year, we have been calling on commodities play. Okay, and I think gold and silver right now is still in the early stage, which means you have still the opportunity to get involved in it. Okay, so gold here, my final target, I would say my short-term target, okay, is 2074. Okay, and I believe that once it clears off this level here, it can break higher. Okay, again, I've shared this charts a couple of times already, but just want to do a very quick refresher. You can see what happened in 2008, okay, to around 2011. In that 2 years time, this is the move on gold. Why? Because same thing, the Federal Reserve have lowered interest rate very significantly, and of course print massive amount of money, right? And that's what happened. Okay, so if let's say we just take like exactly what has happened in the past and then take it back and put it here, okay, that's the scale of it. Okay, even if let's say I'm very conservative, let's start here, right? That's the scale of it. Okay, it can easily go towards somewhere around 3,500, okay, 3,500. So that's the opportunity that I'm saying. Of course, it might not play out as perfect as what we have put up here, but I want to show you the potential to the upside. Okay, so be aware of that. Okay, go just focus on the buy opportunity. So any setup that you see that is worthwhile in terms of your risk to reward, match your strategy, your trade plan, focus on the buy side, right? Very similar here is on silver, focus on the buy side. Okay, so same thing over here. Look out for the first primary target is at $30. And again, if you just zoom out a little bit, go back to where, okay, you might think this is scary, right? But if I show you what happened in 2000 and here, okay, this is where 2008, 2009 to 2011. Okay, so if I take the very bottom to the very high, okay, and you might think that, oh, this is huge, right? That's probably the first push, right? If I put it here, you can see, right? That's probably, this one here is probably this move, right? Then this consolidation here is probably this one. Then we are expecting this one here within the next 6 months to 12 months time, okay? And if that happens, you can see the final target is somewhere around close to $50 or $55 range, okay? So again, huge upside. I'm not saying that this is 100% gonna happen, but what we are looking out for is historically that has happened when the Fed starts to lower interest rate and print a lot of money. That's what happened in 2008 to 2011. Right now, same thing is happening, right? Last year, 2020, the Fed started lower interest rate, print a lot of money. So within the next maybe 1 to 2 years time, that can happen. Okay, yeah. So that's the two commodity plays that again want to share it out here so that you are aware of it. Good. Hey, great. Hey, so that's basically for me from my side for this week. Okay, now I'll open up the remaining time for you to ask any questions that you have, okay, or any, let's say, any particular instruments that you would like me to share my analysis with you. Okay, so over here I see Jimmy asked about Euro franc. Okay, so let's go on to that chart. Okay, Euro franc here, I actually have a position. I think I shared this video out on YouTube as well. Okay, talking about the the whole process, right? The analysis, the execution process of it. And we talk about how you can be aggressive, you can be conservative. If you have yet to watch that video, it's actually up on YouTube. Okay, make sure you go and watch it. It's about 15 minutes length, talking an in-depth analysis on it. Okay, but you do realize, okay, every time we are very confident of a trade, right? We don't go all in. Why? Because you can see this trade here is not working out. Okay, it's very close to the stop. Okay, from my view here is that this trade is likely gonna be tagged out with a stop loss, right? The probability is no longer there. Okay, but let me walk you through what you want to focus on, perhaps on the Euro franc. Okay, so now first off here, on a 4-hour time frame, I think this setup, this pattern is very obvious. From this low, you have this one impulse push, right? And then after that, you get this very, very nice and slow move to the downside, or I would say sideways. Okay, so this is what we call correction. And most of the time when you see a combination of an impulse followed by a correction that looks like that, you expect this to continue to the upside. Okay, so that's one thing. The other one is you start to zoom in a little bit. Of course, you do see this starts to come down slow. Okay, so you have this from here, one push, and then it starts to slow down. We call this a crawl. It can be a diagonal. And of course, it comes back down to this previous low, right? So again, the probability is due to the upside. Okay, but right now, if you ask me, based on the trade that we executed on Friday, that chance of the trade winning is low. But the direction that I'm going to focus on for this pair, Euro franc, is still the same. It's still upside. Okay, so I want you to be aware, right? Over here, while we can, have some small losses when we execute our trade, doesn't mean the direction changes entirely. Because if you take a look at this structure, okay, let me maybe draw in some lines, okay, to illustrate to you the patterns that we are seeing. Okay, something like that. Okay, and of course over here, if I were to draw in this looks something like that, right? So you can see nothing has changed structurally. Okay, everything is still telling us the probability is due to the upside. So for me, definitely, if I'm looking at Euro franc, maybe after that trade stop out, we'll still look at it for another buy setup. Okay, so the analysis of this is still focusing on upside at 1.1150. That's our final primary target. But of course, if you're looking to buy, I would suggest that maybe you want to wait out for something like that, a push up, and then a correction. Then you can look for a trade to go continue to the upside, right? So the previous order that we have is a breakout here. Okay, so it's a little bit more aggressive. I think somewhere here. Okay, so that was a bit more of an aggressive setup. Okay, if you want to understand the detailed thought process and the analysis behind this trade that we took, just watch the video that I released, right? It's on YouTube. I think the title here is how trade and analyze and execute a trade on Euro franc, something like that. Okay, go and watch it. You understand the thought process behind it. Okay, but for now, the analysis on Euro franc is due to the upside. Okay, yeah. So I'm seeing over here Aussie Yen. Okay, let's take a look at Aussie Yen. Okay, and initially I have Aussie Yen in my watch list too. Okay, but the last two candle actually got me to take off this pair, right? Initially I have it in my watch list. Okay, why? Because we have this high here and then price was back at this high, right? I wanted to see how it react. Okay, but you do see right now that for the past 2 4-hour candle, it actually pushed off impulsively, right? Break out of it impulsively. Okay, so that's the part where I took this out of my watch list, because initially if this is a crawl, okay, then I would have a very solid trade to the downside, right? You realize this pattern here, very, very similar to what did we talk about? Oh yeah, cat franc, right? Just now we talked about that. Okay, if let's say this was here, right, we talked about that setup. Okay, so initially you can see Aussie Yen, why I'm monitoring it, because I wanted this, right? And then that would be the perfect setup. Okay, but right now, okay, let me clear off that first. Okay, right now what we are seeing over here is that this is a very strong push up, right? So I'm taking out from my watch list, because then I understand we probably need a longer period of time to see what is next. Okay, So if let's say price here by today maybe, right, this just shoot back down like that and then it starts to form flat, then yep, it's definitely something I'll keep an eye on for a short trade, okay? But this needs to happen. But if let's say this here forms a correction that looks something like that, I will be a little bit cautious on buying it, okay? Because this is already, pretty much on the daily scale, looking something like that, right? So I would say I'm more in favor of looking for a sell trade and less of a buy trade. Okay, so I'm more of like, my bias here is I want to find out sell opportunity, and I'm not so much interested in the buy, right? Because on the daily, if I bring you back, you can see, right, this is already starting to form this. So anytime this can reverse and come back down. Okay, so that's my view on Aussie Yen. I would say, for me, unless this forms an impulse drop and a correction, I will not be putting too much emphasis on it. Okay, so that's on Aussie Yen. Okay, so see how it goes. If let's say today it really starts to come back down, then perfect, right? We'll have that 10 out of 10 setup. Okay, Chan asked about Euro Australia. Let's take a look at that. Euro Australia is down, but it's a bit choppy, right? You can see how this has developed. It's not like very clear and clean. But if you ask me the direction, if let's say you want to focus on for this week, okay, focus on the downside, right? Because again, you can see from this scale here, it comes down pretty fast, and then from there it just goes sideways, right? So this is then again that correction, and then you can look for a trade to the downside. Okay. If you're looking for the sell, then you might want to just target here. Don't be too aggressive. Somewhere back at this low around 5250. Okay. So direction wise is down, but for me, I wouldn't be looking at it or putting too much emphasis on it, because again, we are in the middle of the high and the low, right? So I tend to not put too much emphasis on trades like that. If let's say this is up here forming a crawl, okay, something like that, then yep, I'll look for that. Or let's say this is down here and forming a crawl, then I'll look for the buy, right? But it's in the middle. Usually I'll not put too much emphasis. Okay, so hope that little details, little tips here help you as well, right? If a trade or a chart is like in the middle of significant high and low, usually I don't pay too much attention. Yeah. Krishna asks, any opportunity to start shorting CAD Yen? I again, same thing. I'm looking at some of the yen pairs here, right? Aussie Yen, Kiwi Yen, CAD Yen. But the recent development is not as nice as Euro Yen. Okay, so I'm not saying that they are not valid, but the higher quality, in terms of like, let's say grade A focus, will be Euro Yen, right? Very, very clean. CAD Yen is looking decent. Okay, you can see it starts to slow down a little bit, but I think this can take a longer time for it to develop, right? Something like that before that drop. Very hard to say. Okay, but of course, if you're looking for you're looking at CAD Yen, I would say focus on the downside. Okay, I wouldn't say you want to target here, but maybe somewhere around this, around 8840, right? If let's say you're looking for that, okay. Yeah. Okay, it's not at any significant high too, right? You can take a look here. Not at any significant high. So again, compared to like Euro Yen, I would still say focus on Euro Yen. Okay, but CAD Yen here, if you're looking for it, let's say part of your plan to keep an eye on CAD Yen, then I would say pick up on the sell side. Okay, focus on sell opportunity on it. Okay. Good. So I see Marvin asking about Euro Dollar. Okay, Euro Dollar, definitely stay out of it for this week. Okay. For one very simple reason, is because you see NFP movement. Okay, very impulse push to the upside, right? You need some time to see how it develops. Okay. And if you ask me, okay, I would say it's not the cleanest chart to look at it right now. Okay, maybe I'll clean up all this. Okay, you do see this is where the previous significant high is. This is where the previous low is. Right now on the daily scale, we are more or less like somewhere here, right in the middle. Okay. So the bias is to the upside, the momentum is to the upside, you can see that, right? So I would say there's a high chance this will continue up and maybe retest this previous high. Okay, let me put in that price level for you. Okay, around 1.2350. I think there's a good chance price will just continue this momentum to the upside to 1.2350. But right now on the 4-hour chart, that might not be a setup for you, right? You ideally want to see a decent correction before the buy. Okay, but again, even if this correction is setting up, I will personally not take it simply because it's right smack in the middle of nothing. Okay, so I wouldn't want to take this kind of trade. It's more like a valid setup. If let's say this forms a flag, it's a valid buy. But if I give it a score, it's maybe a 5 out of 10 kind of trade, right? Which is something that I don't trade. Yeah, so that's on euro dollar. Okay, Christy asked about euro pound. Euro pound. Okay, euro pound looks pretty interesting. Okay, let me maybe clean up a little bit on this. Okay, this is the daily scale, right? So daily scale, it tells me that the upside is more attractive for sure. Okay, so I would say if I look at euro pound, focus on the buy, potential final target can be placed at 9495. Okay, very, very attractive upside. 4-hour chart, I think potentially it might be developing soon, but you need to definitely see this happen first. Crawl. Okay, so you definitely need to see that happen. And of course, you have this low here, which is decent, right? You have this impulse, you have this correction, and then you have this mini crawl pattern, and then that will build up the probability to the upside. Okay, so what is a crawl? You don't need to look too far back. Okay, just look at this one here. Okay, this is what we call a crawl, right? So if something like that happened, somewhere around here, okay, maybe this one here needs to go smaller. Okay, something like that. That will be a perfect opportunity for you to take the trade. Very simple. Just look out for the breakout. Okay, so roughly, it's gonna look something like that, right? You have a stop of like 40 pips or so. Very decent. Okay, very, very decent because your upside is huge, right? So you can wait for it, something like that. If this develop into a crawl, I will take this trade. Okay, so you need to see, right? For this to develop, right? Again, for something like this to develop, you need to give it a couple of days. Okay, give you some time expectation, right? Okay, can you see this? It's a bit small. Let me enlarge that. Okay, very obvious, right? So the duration from here to here is about 10 hours. Sorry, not 10 hours, 10 days. Okay, I think this is also a little bit on how you can practice, right? You can use this tool on TradingView to kind of like, as you're new, right? Use this tool to help you give that time expectation, okay? Which means that if today I want to see this happen here, okay, maybe on a smaller scale, right? So let's maybe drill this down somewhere here. That's 6 days. So you need to give it 6 days, okay? 4 or 6 days, right? Somewhere there, okay? Which means that this week you might not get it, right? Because in a week you have 5 trading days, okay? So this I think is where that expectation builds in, right? So you know that this is what I know what I want to see, which is this. And let's say this one here, I understand that the closest time that I'm gonna see this happens, perhaps like closest Thursday or Friday, right? Or if you take a look at that, that's 6 days, which means by next Monday, right? So yeah, right. So I hope that helps. Okay. So again, take note of that. Okay, I think euro pound has a good opportunity, but you need to wait for that to develop. Wouldn't want to just buy here immediately because this can come down all the way. Okay, so you need to see that pattern develop first. Yeah, hope that helps. Okay, we have a question from Ty asking, dollar CAD expect to go up early April 21st but went down 1 month I see it down to the lowest already, expected to go up soon. Okay, now if you take a look at dollar CAD, right? So initially we were saying that let's focus on the buy, right? Because the upside is more attractive. Okay, now this is similar to the part where, you know, where we talk about like CAD yen. Okay, if you ask me, I would not be too keen to buy up here. I would be more interested in the downside because of the opportunity, right? So same principle on dollar CAD. Okay, we're more interested in the upside, but you realize that we don't really talk about it recently. It's simply because there's no setup, right? If you ask me, would I sell it? I would still say no. Okay, of course that's my style, right? But if you have sold it, you know, I don't know if you have a setup to go in or not, but definitely this is not a setup to sell. Maybe this one here is, right? But you want to always, you know, look out for opportunity or the room for price to move, right? So if you sell it somewhere here, and you know, let's just put it in so you can see, right, the risk to reward ratio. Okay, so let's say you're able to sell it here with, let's say, a stop like maybe about, okay, and squeeze it a little bit to like 50, 60 pips, right? And let's say you target here, you can see your risk reward is about 1:2.8. It's decent, but it's not something that I would emphasize too much for myself, right? So this is the part where I would say I would not be focusing on the sell because the downside opportunity might not be as huge, right? But you do see price still coming down, right? Okay, that's why again you do not want to just buy in whenever, you know, when you hear me say, oh, we are focusing on a buy, and then you just go and buy. Don't do that. Okay, but I would say right now, there's no reason for you to buy, but let's keep a very close watch on this low here. Okay, this is again all-time low. If you put it all the way back to 2017. Okay, you want to then keep an eye on that. We are pretty much quite close to that, right? Let me put in that price level for you, 1.2060. Okay, we're pretty close to that. You want to again see how price react off this level. Okay, if let's say this develops a V shape like that, then of course this would be your earliest indication to buy in. You have the impulse, you have the correction. That's the earliest pattern and indication for your buy. The other one is, let's say if this forms a slow move like that, okay, that's another indication for you to buy in. But for this to develop again, you need to maybe wait out another 2 to 3 weeks. Okay, again, this is on daily chart, right? So for that to happen, for this to happen, okay, or even for this to happen, you need to wait out another 2 to 3 weeks. Okay, so that's why dollar CAD, I think right now, just leave it aside, right? There's not much of an opportunity for you to really capitalize on in the short term. Okay. Weiqi asks, take a look at pound yen and pound dollar. The pound actually moved off pretty strong today. Okay, there probably some news or something like that. Okay, but pound dollar here. Okay, let me remove this. Put in a little bit of FIB. I think that would complete it. Okay, let's look. Yep. So add this in, right? Okay, this can be the correction. Okay, something like that. Yeah, so just adding in a little bit of labeling to make it slightly more sophisticated looking. Okay, but really don't need all this, but let's just put all this in, right? So one way to take a look at it is like that. Yeah, so over here you can see this is where the previous high is. It starts to come down, and then of course this is where it's not very corrective in nature, but from this low here we do see this 1 2 3. Okay, and of course it has recently reacted off that 1.4141. Okay, it doesn't mean that it's definitely gonna come down, right? But the idea is, what you want to potentially watch out is how it develops from here. Again, these are key levels that you want to see how price develop. Okay. Now, if let's say from here it comes down impulsively and form a mini flag, this is a trade that you will take and I will take also. Okay, not you will take, I will take. Okay, and target somewhere here. Okay, or even conservatively this low. Okay, but understand that it does not need to come down and form this, right? Because this can easily keep going up and break this previous high. And if let's say this forms a crawl, a diagonal that looks like that, that's also a 10 out of 10 trade to the downside. Okay, so this is my view on pound dollar. Okay, you probably want to be a little bit patient. Don't jump in right now. Okay, because a lot of times people see, oh, it's a reversal candle, right? And then if it's a bearish engulfing or a very bearish candle, they'll immediately jump in. Personally, I wouldn't do that. That's not my strategy. Okay, sometimes it does work. Okay, but sometimes then what you realize is that what if this just forms something like that, right? Then you are selling here, then you get trapped in this whole move. Okay, so I will always say be patient. If let's say this comes down fast today and it starts to form a flag here, then that's where you can start to look for a trade. Okay, so that's on pound dollar. Pound yen is probably pretty much the same. Okay, because these two pair have pound inside, they tend to move similarly. Okay, but if you ask me between pound dollar and pound yen, which one is the one that I would choose to focus a little bit more, I would say pound dollar, right? Because if you take a look at pound yen over here, it's not really the cleanest setup, right? You only have one element to really take a look, which is this high. You have this high and potentially a double top. Okay? But if you go back to pound dollar, okay, you have multiple things that you can see. Okay, first off, you have this high, and then this is the impulse correction. Inside here, you have tree move, you have that fit. Quite a few things are aligned, right? So I would say between pound dollar and pound yen, I will put a little bit more emphasis on pound dollar. But basically, both direction is more or less the same, right? You focus more on the downside because that's where the room for you to profit is bigger. Okay. Good. Yeah, I know Wei likes to scout GJ, right? And then it's not a easy. Okay, GJ has a nickname called Dragon. Okay, I'm not sure if you guys are aware, right? Some people call Pound Yen the Dragon, right? Because of how huge the volatility is on this pair. Okay, and that's the reason why probably the name here Dragon comes in, right? Then you need to start to learn how to tame the dragon. Okay, so that's a little bit on like the nickname of GJ. Okay, Jimmy asks if 4 hour you found a crawl and then 1 hour flag, what should we do? Okay, if both of it, that means the 4 hour crawl and the 1 hour flag is telling you the same direction, then that's good, right? Because both time frame can align and tell you the same direction. But let's say one says buy and then the other one says sell, then you want to be cautious, you want to avoid, right? So it's not about the pattern, it's about what the pattern tells you in terms of the direction. Okay, I think that's important. Okay, Okay, Krishna asked about Aussie Kiwi, right? Okay, let's take a look at the last pair here. Okay, that you guys asked is on Aussie Kiwi. I would say it's still upside, right? This is on 4 hour, right? So 4 hour is definitely still focusing on the upside if you ask me. Okay, but you want to be a little bit patient on this. Okay, so same thing over here. I think it's important to see a flag. Okay, before the push up, and of course you might also start to see this come back down first. Okay, because you can see this whole pattern here can easily, this can easily develop into something like that. So if I were to extend that, be something like that, right? Roughly. Okay, so that can easily develop to this. Then what you have is like the double bottom. Okay, so be very cautious on that. Again, what I can do today is to share with you based on what the market is developing. Okay, as it continues to develop, you need to still monitor it, because today I would say, based on today, if you see something like that, that's a good trade to the upside, right? But this can easily just turn into something like that. Okay, then from there, something like this is then the trade for you right here. Okay, so for today, I would say for direction wise, it's due to the upside, but of course, you need to then see what develops, right? For me, for now, I wouldn't put Aussie Kiwi into my watch list, right? Because again, we need to see how it develops. It might take about 2 to 3 days. Then from there, we need to then again come back and analyze if this is worth focusing on. Yeah. Good. Hey, we have one question here from Spooks asking. Hey, so I'm having, so you're asking is you're having trouble executing a trade, um and the question is more of like, how do we know we are near the end of the correction? Okay, this part here, of course, is not a simple and direct answer to give it to you like that, because there are quite a bit of things coming together, right? But I would say, you actually realize that a lot of our analysis over here based on Elliott Wave principle. Okay, so one way to really understand Elliott Wave, okay, I would maybe do this first. Let me. Okay, I think I talked about this book before, right? But I think it's important that you need to go and understand a little bit more by reading this book. Okay, let me see if this works. Okay, so I think it's flip. Okay, but basically this book title is called Elliott Wave Principle. The cover looks like that, right? You can actually get it off soft copy, PDF version, or you can even buy a hard copy. Okay, I think it's fairly accessible. Okay, do give this book a read. Okay, now first off, I think that is not an easy read. Okay, that book is, you probably need to go through it a couple of times. But that book kind of like give you a very good understanding of what Elliott Wave principle is, right? And in order for you to understand, like we talk about impulse and flag, right? Things like that. These are all part of Elliott Wave patterns, right? And one of the simplest Elliott Wave pattern is 1, 2, 3, 4, 5, and then we simplify this as an impulse push, okay? And then after that, it will form a 3-wave correction, right? And that's where you see people who's doing Elliott Wave here says A, B, C, right? A, B, C. I think I forgot to switch it back. Okay. What I was saying just now is that if you base on the simplest Elliott Wave pattern, is where you have your 1, 2, 3, 4, 5. Okay, and let me draw that nicely. 1, 2, 3, 4, 5. Okay, and this is where we label it, simplify it into an impulse. And then after that, you get your A, B, C, right? This is where we label it as our correction. Okay, so within the Elliott Wave principle, of course, there are various methods to identify the C wave, okay, or this ABC, the completion of this. There are multiple ways to do that. Again, there's no such thing as like the best way, right, or the right way. The idea here is there are multiple methods, okay, to do that. You can use Fibonacci. You can look at it from a patterns point of view, okay, from multiple time frame perspective and things like that, right? So again, I can't give you like a simple and direct answer to kind of solve your question on that. But the guidance here for you is perhaps to understand a little bit more in terms of Elliott Wave, okay, and the book that I recommend is of course that, right? Read it. Maybe the first time you might not really fully understand everything, but you need to definitely read it a few times. Okay, I did that too, because of number one, the languaging that they use is not something that we use here, and the way we communicate, right? That's one. Number two, of course, there's a lot of technical terms, so you might need to slowly really go and understand it as well. Okay, so that's one way you can actually pick up from it. Yeah, right. So again, I can't give you like the direct, straightforward answer, because there are really few elements building into it on how to finally understand like, okay, this is likely to complete, right? Or you need to give it a bit more time. Okay, so hope that helps. Okay, yeah. So again, don't rush through things. I think it's important that it's good that you identify like which areas you need to work on, and then from there, start working on it. Okay, that's the idea of it. Okay, is that's how trading works, right? Good. Okay, so that's all from me today over here. Okay, great to have you guys again. I kind of like enjoy this kind of session. Okay, and if you are keen to join us, you can join me back again on Thursday where we will be sharing in Chinese, okay, Mandarin. If not, then I'll see you guys next week, same time, right, on Monday again. Okay, so all the best for